Welcome to episode number 221 of AAA Weekly Knowledge Series. We are with you today to discuss the importance of valuation under the IBC. May it be a corporate insolvency resolution process or a liquidation process, or it's a voluntary liquidation, or it is a pre-packaged insolvency resolution process, the valuation is very important and the role of registered valuer is increasing day by day, especially in the last era of 6 months. IBBI started all this amendments process. So the first thing that the IBBI started was on 14th of November 2025 when the IBBI released a discussion paper on valuation to discuss fair value, also to discuss the business valuation rather than asset valuation during CIRP, and also proposed a coordinating valuer. Because see, what was happening, that there is a valuer who will value land and building, then one valuer will value plant and machinery, and the other will do the securities and financial asset. However, there was nobody who actually would understand the company as a whole, the synergies, the intangible assets, the business assets, the human resources, the technology, the patents, the brand. Nobody was there to coordinate between all of them, add the value of all these assets, and provide a business valuation of the corporate debtor. That process was not there. So this was the first time that it was proposed by IBBI by way of a discussion paper, and then immediately after that, on 19th of November 2025, IBBI released formats for different valuations. That was the proposed formats. Of course, the formats finally, which has been notified on 15th June 2026, just few days before our video. Those formats are slightly different because see, these formats have now captured all those amendments, whatever has happened in IBC Amendment Act 2026, and also in various regulations like the CIRP regulations, all the regulations. So the final formats which has been released by way of a circular on 15th June 2026 now incorporates all amendments of IBC, all regulations, the intent of the IBBI, everything has now been notified by way of circulars. Today, what we are going to discuss is what all is final now, what is the obligation of the resolution professionals or liquidators, and what are the obligations of registered valuers, and also specifically the coordinating valuer. Ankit, this is very important and this is your subject. I am only understanding in my capacity as a resolution professional or a liquidator what are my obligations. But what are the obligations of all the registered valuers, that you have to actually guide them clearly. And also our objective in this particular episode is to guide the IRP, RP liquidators how to get the valuation done and how to safeguard, how to provide the information, because the formats which has been notified on 15th of June 2026 provides various responsibilities in a format, information in a format that has to be provided by the RP, and then only the registered valuer will do the compliances. So Ankit, if we start with one thing, what are the key amendments about registered valuers or the valuation process in IBC Amendment Act 2026? Let us first of all clarify this to our audience.
So in the code itself, the biggest change that has been made is to make registered valuers a part of service provider. So the whole idea that earlier all disciplinary sections were directed towards insolvency professionals was changed, and it was replaced with service providers, and service providers have now rather been defined in section 3 of the code. And that's where service providers also include registered valuers who are registered under Companies Act and who are working for an IBC report. So this is how, what the biggest change that has happened is that registered valuers have come within the regulatory supervision of the code and also IBBI, and also all the provisions with respect to complaints, with respect to inspection, with respect to passing any disciplinary order against them. So that provision has been extended. Earlier, what was there? Earlier, the IBBI had powers to take action against registered valuers only under section 247 of the Companies Act. So that had a limitation. But now what has happened is that as a service provider under IBC, as a valuer, one will have liabilities or one will have duties to perform. And if those are not done properly, then there is a jurisdiction with IBBI to pass disciplinary action against service providers, including registered valuers.
You mean to say that, like insolvency professionals, the registered valuers are also now liable for more penalties, more disciplinary actions in case they do not comply with the norms, regulations, and the Act. The formats are so elaborate that if they miss any information and they have that information, then it will invite penalty. And the penalty would be almost equivalent to all service providers, may it be liquidator, RP, IRP, or the registered valuers. The penalty values are same. There are no separate penalties for registered valuers and there are no separate penalties for insolvency professionals. Is that correct?
Yes. So the penalties that we have for, so they are of course, they extend. So the entire, as I said, complaint handling process. So now somebody can go on IBBA's website and file a form and say that, okay, this valuation report is something that I want to complain against. This has not been done as per the regulations or whatever one would want to say. So that is now practically possible. I would say that earlier also we have seen some disciplinary action on registered values from IBBI. But we see that happening as IBBI being the regulator which has been notified under the Companies Act, number one. Number two, there again, like insolvency professionals, the triggers at many times is an NCLT order which talks about or where the valuation has been challenged by any of the aggrieved parties. So sometimes the allegation is that the valuer gave a lesser value and therefore the assets were sold by the RP at a lesser value. Sometimes the allegation is that the valuation is way higher and that's why the resolution plan has not been passed. So now it becomes very, very challenging for the registered valuer to say that yes, this is the value I have come across. And then there has to be a very strong basis to that valuation report. So I remember one disciplinary order where the allegation was that the RV has not disclosed the circle rate in the report, although the RV did say that the circle rate is something which is not a indication of the market value, and there has been enough market value based basis that was provided. But again, the idea is that all sources of information have to be mentioned in the valuation report as per the new format. Even the sources that are independently available have to be talked off by the RV. So he can't say, I did market survey, I found a rate of XYZ and that is what I have taken. He has to say more as to what was the process, what was the information, what was the actual source of that information, and make it part of his report.
Just to add what Ankit has said, I would also like to say that the section 217, section 218, section 219 and section 196 of the code would be applicable to registered valuers also. Now what these sections are all about, one, that this functioning of the registered valuers would actually come under the IBBI's inspection. The IBBI can investigate under section 218 of the whatever the work has been done. They are also can have investigation, and IBBI also has power to inspect the records of the service provider, which now includes registered valuers. Under section 219, IBBI can visit your office also to inspect your records. And under section 196, it is all parallel. Whatever way the insolvency professionals are being treated, the same way and in the same kind of context, the registered valuers will also be treated. So these are the various amendments which has taken place in the IBC Amendment Act 2026. So Ankit, so let us move on to the other, which is very, very important part. What is the concept of coordinating valuer? And see, what is this, what is the background of this coordinating valuer? Why this was required?
So when we look at the past regulations and past code, we understand that there was always this idea that fair value and liquidation value will be given by the valuer. The average of these valuation reports, because two values are appointed, the average of these values would be used for all purposes, whether statistical or whether decision making purposes. And that's where the concept came at one point in time, that the liquidation value and fair value is being given, but let's define significant difference between these two valuation reports, and then allow for or make mandatory, in case of significant difference, a third valuation report. So what this evolved into was the idea that the land and building report will be compared with the land and building report of the second valuer. The plant and machinery and the SFA reports from valuer 1 will be compared with valuer 2's report. And that's where, if the significant difference in each asset class is more than 25%, then the third valuer will be appointed for that asset class. However, this created some confusion with respect to whether the value of the business as a going concern is required to be computed or not, because at times the piecemeal assets which are categorized into land and building, plant and machinery, or securities or financial assets, they do not include the intangible assets or the company's going concern operation or synergistic value of all these assets coming together. So what has been done now, and what was proposed in November in the draft regulations, was the concept of a coordinating valuer. That now, whether an entity is appointed or whether three different valuers are appointed for different asset classes, one of those asset class valuers will perform what is called a coordinating valuer concept, or rather coordinating valuer role. This valuer will look into the reports of the land and building, the PNM and the SFA. They will then he will see that, all these reports should be made with common assumptions or similar assumptions. It should not be that one valuer is assuming very different assumptions and the other person is assuming very different. Let's say, for example, the land and building valuer is assuming that the land will be sold without the plant and machinery. And the plant and machinery valuer is assuming that no, the plant and machinery will remain here and will be used here, and that's how he has computed the value. So that is where a synchronization will happen across all asset classes. And number three, what will happen is that the coordinating valuer is supposed to comment on the synergistic value with respect to the company as a whole and how it affects the fair value, not the liquidation value, but the fair value. That is how the format has come out for coordinating valuer. And these are broadly the scope of work for the coordinating valuer, that he will make sure that all the reports are in sync. They are they're not very different from each other. They're not having very different assumptions. And then he will give a comment on the intangible assets, and then kind of close the process. Now, these changes with respect to the coordinating valuer in the regulations were made in February, and the report format for coordinating valuer has now come in May. So this is how the implementation cycle has been completed on 15th June. Now we have absolute clarity on what is required from the coordinating valuer, because we have the scope of work, we have the engagement letter components, what is required in the coordinating valuer report. So all that is now part of this 15th June circular, which has notified the valuation formats as well.
This means that from 15th June 2026 onwards, in case we have to engage registered valuers, then out of one set of registered valuers, now the one set includes land and building valuer, plant and machinery, and SFA valuer. So this three of them is one set, and another set having all the three, depending upon whether these assets are available or not in the corporate debtors assets. Out of each set, one will be designated as coordinating valuer.
If an entity is appointed,
if the entity is appointed, then one of the entity would be appointed.
The entity will be the coordinating valuer, but one of the partners amongst the three partners who are signing the report will be signing the coordinating value report. This
so
is how
yes,
we can read.
If both are entities, then one entity would be considered as one set. However, one of the partner, may it be land and building, may it be plant and machinery, or may it be SFA, but then most probably the role of the coordinating valuer is to understand other assets other than land and building, plant and machinery, and securities and financial asset. What he is supposed to understand is what is the value of the business of the organization, business of the corporate debtor. He would understand the various contracts that may have value for the public at large, for the resolution applicant. He may have to understand the unabsorbed losses, unabsorbed depreciation. He may have to see the various other intangible assets, contingent assets, litigations which actually may bring fruits, all this has to be assessed by the coordinating valuer. So therefore, the role of the coordinating valuer would be higher, and finally he would be responsible to give the business value of the corporate debtor.
So in case we read 5.22 of this 15 June circular, we're talking about that the coordinating valuer shall consider the operating business of the CD, expected future cash flows, industry outlook and macroeconomic conditions, business synergies arising from integrated operations, and tangible and intangible assets associated with the business. Then, in intangible assets, he's supposed to understand the brand value, trademarks and copyrights, patents, licenses, customer relationships, distribution networks, goodwill and reputation associated with the business. So all these assets or all these intangible assets, which are typically part of a going concern business, are required to be assessed by the coordinating value.
So the role of the coordinating valuer is much higher. So I believe whenever we seek as an insolvency professional, whenever we seek the quotations, we may have to say that we also would like to seek quotations inclusive of the coordinating valuer. So then, and also the scope of work must say that the coordinating valuer will actually assess all these aspects if it is available. However, the information for all this will have to be provided by the IRP or the RP. That is very important.
So a change there. In case the RP is IRP or RP is looking at appointing individual valuers, let's say, for different asset classes, then he will have to ask for fee code that in case you are appointed as the, let's say, land and building valuer, and the coordinating valuer is not your scope of work, then what will be your fee? And in case coordinating valuer is given you as a scope of work, then what will be your fee? Similarly for plant and machinery, similar for SFA. And then based on the codes and based on the profiles of these valuers, the RP can choose to appoint one of these people with the coordinating value role, and the others can be appointed without the coordinating value role. For entities, of course, it will be way simpler because already there is a customary process in the ecosystem that the entities normally give a combined code for all three asset classes or the asset classes that are applicable to the CD, and there the coordinating valuer concept will also be part of the same consolidated fee.
So, so this concept is also clear about the coordinating value. But now, Ankit, I want to actually ask you, the role of the registered valuer actually has become very important now because of the clarification given in section 53 of IBC. Now, the clarification says that all the secured creditors, whosoever has any security interest in the assets of the company, those assets would be valued, and the value of their secured creditor, the secured debt, would be equivalent to the value given by the registered valuer for the assets which are mortgaged with them. So therefore, each and every secured creditor would like to understand from the registered valuer like how the valuer has calculated the valuation of the assets mortgaged to them, because if their secured part of the total debt is now depends upon the valuation given by the registered valuer, and their entitlement out of the resolution plan would also accordingly change. So there will be a lot of pressure on the registered valuers to provide a valuation which is acceptable to the secured creditor. Similarly, the dissenting creditor, like they also have an entitlement based on the value of their security interest. So after this clarification, Ankit, how do you find that the registered valuers will cope up with the pressure from the creditors?
So, of course, there will be higher scrutiny of the valuation reports. So far, the idea has been that the valuer will present the methodology to the COC. That is the interaction that the valuer has with the committee of creditors as of now. Now, I foresee that after this change, what is going to happen is that the valuer would also be asked to come and present the valuation report in the meeting. That is not specifically provided in the regulation, but I anticipate that when these values become so important for how much a creditor will be entitled to, then the creditors will also ask the valuer to present this valuation report in the COC meeting. And when the valuer does that, if the creditors see that there is an assumption problem, there is a basis, or there is something in the valuation report which does not have an adequate basis, the creditors can choose to give additional information to the valuer and ask him to say that you consider this further information, or raise a complaint to the RP that no, the valuation report is not with adequate basis. So the basis becomes very important. If the RV, registered valuer, has, let's say, valued a land and building or a plant and machinery with a certain methodology, and that methodology is very different from what the creditors have had seen in their valuation reports prior to the CRP process, then that change is something that will have to be discussed in the COC meeting, documented, and taken record of, that this is where the difference in the report or difference in the valuations internally have been. This is what everyone will have to record. So right now what happens is that this comparison is still done, but it is done at the by the creditors at their end internally, and if they have any feedback on the report, they will give it to the RP. But I believe it will be little more engaging with the registered values in times to come because of the sensitivity and the importance of the report.
So, do you also feel that the creditors may go to the extent of filing a complaint before IBPI under section 217, which is now applicable to registered valuers as it is applicable to insolvency professionals? Do you feel that in case they are not convinced, normally whenever they finance a particular entity based on the valuation reports, those valuations are normally very liberal, because see, they also have to meet their budgets for funding, and when it goes to a stressed asset, then those valuations comes down drastically. So can they also file a complaint under section 217, and what are the protections for the registered valuer in case they go to that extent?
See, any complaint from any aggrieved party will always be based on what? It cannot say, the complaint cannot say, or the complaint will not be perhaps entertained if the complaint simply says the value was high and now it is low. The complainant will always say that, see, the basis was not there, valuation report has not been followed, the format has not been followed, sources of information that were given by the RP has not been considered by the RV. So it will be based on these allegations, in my opinion. It won't be a simple allegation that the value is different and therefore we have a grievance against the valuer. So there will be a larger scrutiny of the valuation reports, and in my opinion that might generate some complaints in case the registered valuer has missed on talking about something in his valuation report. But in case the valuation report is adequate, let's say the valuation report lists down all the 20 things that the RV said he needs to do the valuation, and he says that, okay, out of these 20 things, 10 were given to me, the other 10 were not available. So then in that case, the complainant himself will be suffering from defects because the complainant might not have given that information only.
I think, Ankit, you are absolutely right, because I can also see there are judgments from ANCLAT, and one such judgment that I can see is Vishisht Builders and Engineers Limited versus Vishisht Estate Limited in consortium versus Trishul Dream Home Limited, where the appeal before ANCLAT was that the valuation of the corporate debtor is very low, so therefore this resolution plan may be rejected. So the ANCLAT very clearly said that unless you give some reasons that why the valuation is low, whether there was a process problem, otherwise this is a technical issue and it cannot be interfered. The valuation process cannot be interfered if there is anything which is like a default in the process. In another judgment, which is in the case of IFCI Limited versus Raju Planikuran Keshavaban, the RP of Hira Construction Company Private Limited, this is again ANCLAT judgment from Principal Bench, New Delhi, where it is said that the tribunal in fact ordered a fresh valuation and reinitiation of CIRP because some of the assets were missed out from valuation. The ANCLAT said that this is a material irregularity, and if it is a material irregularity, then the objection was considered as genuine objection, and it was considered that the valuation may be done afresh. So if the valuation is supposed to be done afresh, that means the process of inviting resolution plans will also be done again. But in another judgment, which is something which is not probably related, but see, like Ankit was saying that now every creditor would be interested in discussing the valuation of those assets which are mortgaged to him. So one judgment, which is Tamil Nadu Mercantile Bank Limited versus Radha Krishnan Dharmarajan, this is again an NCL 80 judgment of 2026, where it is said that the COC members are supposed to know the fair value and the liquidation value after giving the confidentiality undertaking. But the law is not having given any mandate that the entire complete valuation report has to be shared with them. Now, in case we give them the liquidation value or the fair value of the company as a whole, they would ask for the detailed asset-wise report because they want to understand what would be their share in the secured debt. How would you handle this? And is there any change in this process, in this last amendment processes?
So I think again the security part we've already discussed. Now with respect to how NCLT and NCLAT litigation will go around valuation reports, that of course will, as I said, will be totally based on the quality of the valuation report itself.
So I think that's, I also feel like that we'll see, because see the secured creditor, they would not be able to put that much of pressure on the registered valuer, because the registered valuer is an independent entity and the registered valuer will also have to comply with all the regulations. It is not possible for the registered valuer to share the complete valuation report as per this very recent judgment of NCLAT. So he will only share the segment wise, like the land and building, plant and machinery, and the SFA. He can share these kind of valuation, fair value, and the liquidation value. But if anyone asks that I need specific valuation of my asset, I think that can still be denied, even if the confidentiality undertaking is given.
So my understanding is that the RP has the duty to appoint this valuation report, and the valuation date for this is CIRP date, CRP commencement date. Now, what happens if the creditors want another report? Now, nothing stops them from going to an independent valuer that they may be having empaneled on their board, and go to that independent valuer and ask that what should be the value of this secured asset.
I think this is a good answer.
So in case they go to that valuer and say that okay, this is the value, and they understand that how that valuation report, independent valuation report that they have got from their consultant or their empaneled valuer is different from what the RP is given, they can choose to say or understand their rights if they want to dissent and they don't want to approve the resolution plan. If the resolution plan is a lesser value resolution plan based on the security that they have. They can also understand through their own consultants if the valuation report that is submitted to the RP by the RV who is appointed in the process is faulty in any way, so that they can get those faults corrected in case that is something that helps them.
So Ankit, with effect from 1st April 2026, IBBI through a circular has notified that from 1st April 2026, the registered valuers will use International Valuation Standard, IVS. So I need you to provide this information to all the insolvency professionals and the registered valuers. What exactly is the difference between the earlier standards and the International Valuation Standard?
Earlier, the regulations used to, some of these regulations referred to internationally accepted valuation standards. Some of these regulations referred to the company's registered valuers and valuation rules. In the rules itself, it was prescribed that while India does not have a standard of its own as of now, the valuers who are giving reports as registered valuers will be abiding with the with an internationally accepted valuation standard, or the valuation standard that is notified or accepted by their RVO. So what had happened was that a few RVOs in the country had adopted different standards and a few had adopted different standards. So therefore some reports were based on IVS issued by IVSC, like our entity's report has always been based on IVS, whereas an individual who might have been registered with, let's say, ICAI RVO would have been following the ICAI valuation standards. So there was a gap in what standard is being followed, although all these standards are almost similar. but still there might be some variation because of that. So now the call that has been taken is that IBPI has said that all valuation reports which are given under the code have to be compliant with IVS, so that this deviation or this lack of clarity as to which standard is applicable on these reports is removed.
But see, like Ankit, this IBS is primarily, it is a basically the
IVS gives very broad guidelines on how a valuation is required to be done, what the valuer is required to consider. It gives very broad guidelines. This is an international valuation standard, so it is not India specific also. But it will say that okay, in case our registered valuer is doing a report, then he has to consider all the approaches. Then he has to comment on all the approaches. Then he has to kind of clearly state why he has chosen a particular approach or a method. So these guidelines or this standard or this part of the standard is common. So it will talk about all the methods, how the method is required to be implemented, what are the steps or broad steps to the method, as to how do you, in case let's say you're doing a DCF, so it will say that you have to identify the cash flows, and you have to identify the present value, the discount factor, the discount rate. Then it will talk about what all what all discounts do you give, or what all premiums do you add to the entire valuation process. So that has been standardized in the IVS.
So, as I was reading regarding international valuation standards, I saw that these standards are more of principle based and does not cover various scenarios or facts related illustrations. Whereas the standards of various RVOs, like those were actually having some scenarios also and some kind of detailed guidelines also for the registered valuers. And so when we say that the international valuation standards are now finally the mandate from the lawmakers, what would you suggest to the insolvency professionals or to the registered valuers?
So the IVS is of course standards. Now the standards can't be, or normally the standards are not very perfect to the exact requirement of a valuation. So therefore this circular which has now come, which has the format, which has standardized the format for an IBC evaluation, is much more detailed. It talks about all the things that are required in a valuation report. Apart from this, what the RVOs are now working on is detailed guidelines with respect to specific industries, with respect to specific case scenarios are being worked out based on the combined reading of the circular that has been released by IBPI on the valuation report structure and the IVS. So that is what everyone is working on, to prepare detailed guidelines on how will the valuation standard and IVA and IBPI circular merge, and what will be the requirement for the registered valuers based on that merged reading.
So fine, Ankit. I think we can also touch upon one point that the regulations now says that if the corporate debtor is MSME, then the basic requirement is that there will be only one set of valuers, one set of registered valuers, including one coordinating valuer. That is the basic requirement of the regulation. However, there is a rider that in case the committee of creditors wants that they want two, then they can appoint two. Any comments from your side on this? Like, although the intent was to expedite the process and to reduce the CIRP cost. However, in the last couple of cases that we have dealt with the committee of creditors, they are already decided that they will go for two valuers, not one. They would go for two set of valuers. So maybe in some smaller cases, very small cases, maybe the committee of creditors may agree for only one set of valuers. Any of comments for this MSME?
So whether the CD for which an IRP has been appointed as an MSME or not was important earlier also, to strategize and understand how the resolution plan can work and how the CRP will be conducted. So this question, that if an today I'm appointed as an IRP for a case, the first thing that I will start looking for, or one of the first few things I like to understand, is whether this person is an MSME or not, or the CD is an MSME or not, because I want to understand 29A implication, and I also want to understand whether I will be what kind of valuation appointment I will have to do. Then I will go back to the COC members. Of course, I get I get to talk to the COC members after their claims have been filed. I might have earlier access with the applicant and other major creditors in some scenarios, but I will talk to them and I will understand if they want two valuation reports, or two RVs to set of RVs to be appointed, or they would want one to be appointed. So as you said, that two are something that we understand many COC members might still want to go for two valuation set of valuers, but I think in some scenarios one will be appointed, especially in those cases where there is lack of asset, there is clarity that the company hardly has any asset, the cost is something that the COC has to bear. So in those cases, I believe one set is something that COC can choose where the MSME criteria is also being met.
I think very right. And now I will touch upon one scenario which is applicable to real estate corporate debtors. Now, the real estate sector was facing a difficulty. Some of the registered valuers, they were valuing the land separate. They were valuing the construction on that piece of land separately and the SFA separately, and they were trying to calculate the fair value and the liquidation value. They were not considering that if the project would be completed, then what would be the valuation of the business of the corporate debtor? Because that was not part of the mandate which was there in the regulations or in the IBC. Now, since there is a specific mandate that the valuation of the business or the valuation of the corporate debtor as a whole has to be arrived at by the coordinating valuer. Now, it would be possible for the coordinating valuer to understand the rights of allottees on the units which are already constructed or allotted to them. The various judicial pronouncements says that their rights cannot be terminated, so they have an entitlement on the units. So therefore, the overall presumptions would be that the project would be completed. Irrespective of the valuation of the land or the construction, there would be a complete future fund flow estimates and the cost estimates. And then finally, the coordinating valuer will arrive at that the project would be finished in another 3 years' time, and this is the total unsold inventory. This is the total amount receivable from the allottees, and these are the other revenues, and this is the total cost of construction, administration, marketing, and finally the profit would be calculated. Maybe after about 3 years, this much profit would be earned. Then without considering the liabilities, because the liabilities of course will be settled separately. Then the present net value, the net present NPV of that profit, that should be considered as the value of a real estate project. So any views of on this?
So international valuation standards have been saying or have talk about the aspect of a developmental property. That's what it talks about, and this has been like there since donkey years. So right from the first day when insolvency started, ideally we have done every valuation for a real estate project using that aspect of international valuation standard, which talks about assessing if a land or if certain rights are available, where the land has value as a developmental property. And that's where the method that is prescribed under IVS 410 is a residual method. The residual method simply talks about the idea that you just shared, that if the property is constructed, what will be the market value of the asset that is constructed, or the apartments that are constructed, or whatever is constructed, less the cost of construction and less the profit element that is there in this element, this whole construction. Now, how that is also part of the circular, that is 15th June circular, is that in 15th June circular, when we look at the valuation format, it very clearly says that the developmental aspect of a land and building is required to be considered by the valuer when they are valuing the asset, land asset. So therefore, it has been made part of the format also, but I would like to say that it has been part of international valuation standards since the beginning. And there has never been any confusion that any asset or any land and building which has a developmental potential should also be looked with that view or with that aspect.
No, I think very well, Ankit. So you are saying that this real estate aspect is also now indicated in the formats, that we actually have to say the developmental value,
The aspect is
the
written as part
use
of the
zone of the land,
Yeah.
that is also part
That
of
is
the
also
format.
part of-
So very well, Ankit. Now I will only have one like next question from for you is, there has been instances, although the regulations right from the beginning says that the valuation has to be based on the physical verification of the assets. That are the regulation, and there is no dilution in that. However, there has been many instances where the valuation we have obtained is basically called as desk valuation. Because see, when the access was not given, or it was not possible for physical verification. So in all these amendments, or in the international valuation standards, is there anything which is again saying that it has to be based on physical verification only, or we can still go for some kind of desk valuation?
It was always physical, based on physical verification, but physical verification is limited to, of course, tangible assets and inventories. That is what is written in the regulation itself, and that is what is continued. That continues to be the same. There is no change there. Physical verification is mandatory. Desktop verification is not something that I remember doing in any of the valuation reports that we have done under IBC. If it happens that, example, let's say the control and custody for a specific asset is not available with the RP. It's an exceptional circumstance. So there we look at the rights and the papers that the RP has, the litigation that might be going on with respect to that property. But what we still do is that we still do the physical visit from outside the premises. We might not go inside the premises. Then we put a disclaimer that yes, this is the status, legal status of the property as per the RP, as per the records of the RP. We have done the physical verification from outside. This is what we find, and therefore we kind of ascertain a value based on our understanding of the ownership and our understanding of the effect that it might have on the ownership of the property. But mostly 99% of the cases, we either say that this property is owned by the CD, or we say it is not owned by the CD as on the CRP date, and based on the assumptions, based on the legal standing, we take one of these standings and then value the property. It is only in the liquidation value part, fair value, we will assess whether if we say that the CD owns the property, fair value will be complete. But we say that, of course, if that property is liquidated as on the CRP date with those litigations on the property, then it will fetch maybe a lesser value because of the lack of marketability for that asset because of the pending litigation.
So you mean to say the desk valuation is still possible if the physical verification is not possible, and if it is disclosed and highlighted in the valuation report, and the RP also highlights this in the RFRP, then it actually may go.
But it is a very, very sharp exception, because then the RP also has to accept that he is not able to take custody by that point in time when the valuation was completed. Normally, we see that the valuation reports are completed by the 4th, 5th month, 6th month at times of the CRP initiation, and they're not done earlier. So by that time, we see that normally custody and control is taken. If it is not taken by then, sometimes the valuation even is pushed further so that the real value can be discovered in the CRP process or in the valuation process.
So Ankit, now you see that these registered valuers are also considered as a service providers, and section 217, 218, 219 and 196 are applicable. Anyone can file a complaint against the registered valuers. They are also subject to inspections, they are also subject to investigation, and they are also subject to disciplinary action. Can you, based on the various orders passed by IBBI so far, can you just guide them what kind of errors that they should not do, what kind of non-compliances will invite action?
So what has happened so far is that different valuers were, as I said, going concern related issues. So different values were taking a different aspect. Similarly, IVS interpretation, different values were taking a different interpretation of the IVS and its applicability in IBC. But if today now, based on this 15 June circular, if the registered valuers follow this diligently and complete this as a format, as a form, as a checklist, and do everything diligently based on what it guides to the RV, then every aspect that has been taken or talked about by IBBI in the earlier DC orders has actually been made part of this clarification or these formats. But in case I still want to talk about what have been the issues in the past, one issue that has been highlighted is that, let's say, a securities or financial asset valuer simply picks up the trade receivables and says that, okay, these trade receivables totaling to 600 crores, I am valuing them with a 40% discount at this much crores. So now there IBBI has historically said that you can't just have a random number and multiply it on a basis, and you don't give any reason why you have taken 40, why this 40 should not have been 20, why this 40 could not have been 80. So there then this circular, 15 June circular, also has a section as to how to value receivables. What are the procedures that the RV has to perform to value receivables? So it gives a clarity on what the IBBI is expecting from the valuer when they are valuing receivables. So clarifies that aspect. The second is a random and a unilateral discount to compute a liquidation value. So in the past, there have been some reports where a unilateral percentage has been put. So let's say somebody has given a 60% discount on the fair value to compute a liquidation value without giving any basis as to why 60%, why not 20%. So again, basis was important. Then there have been cases where some registered valuer might not have given or rather given the complete basis of why he took a base value or a comparison value which was available in the market. Somebody might have not stated the circle rate in the report, so that has been made part of the report. Similarly, we have other aspects like somebody not doing a physical verification. So somebody said in the report that we had done physical verification 6 months back, we are not doing it again. So somebody said that no, we did a desktop valuation. So those aspects have also been covered in these DC orders. So this is mostly it.
So I think that is also a good guidance to registered valuers. Now at the end, Ankit, I would actually ask you, on 15th of June 2026, the detailed formats now are notified by IBBI for land and building, plant and machinery, SFA, and for the coordinating valuers. Can you just brief what all information would be required now for the RP to provide and for the valuers to give in the valuation report?
Sure, I will just share that information. So common information would be engagement and appointment documents, corporate data, CD master data like SIN number, registered and principal office addresses. All these are normally available very easily. Then process information, maybe the latest IMs or parts of it or extracts of it can be made available to the RV, and the RV can understand all the litigation and its effect on the company as a going concern. And then the financial information, that is the latest audited financial statements and the unaudited financial statements which are for a recent date. That allows the value to understand and talk about whether there's a going concern, whether there was any profitability in the recent history of the company, what kind of turnover, what kind of business was the CD doing. So that is important. Ongoing litigations, of course, can affect the valuation of assets, so that is important. Then with respect to land and building assets, we are looking at property identification related documents. So that is normally something that title deeds are available, any lease deeds, any mutation, possession documents, any physical details with respect to photographs, measurements, building plans. So all these become usable because many times what we see is that the registered valuer is appointed and the registered valuer is told that, okay, you go and visit and you will find everything there. But what happens in that case is that the visit is done, but there is no document to reconcile the physical visit with. So the whole idea of physical verification of the asset is that you physically verify the asset based on the documents that are available with the registered valuer. Then you have with plant and machinery, you normally need the fixed asset register with the list of machineries, their age, their make, their condition or their use or their utility in the system or in the manufacturing system of the company. So that is normally required. Then you have securities and financial assets. So based on the list of assets that you have in the financial statements, you can ask for income tax records to understand any implication of brought forward losses or past losses claimed, any deferred tax asset which might need valuation of, loans and advances, Inventories, inventory related list of inventories are again important if you have inventories there. You have the debtors, so debtor related information can be aging, ledgers, invoices, follow up related documents, any subsequent receipts that have been received from the debtors after the CIP commencement date. So all that becomes GST related credits that are appearing in the name of the CD, or any balance in the electronic cash register of the GST. So with respect to receivables, you would want detailed aging, you would want KYC and profile of the major debtors, contractual documents, documentation for receivables, historical recovery data from the same creditors. With respect to coordinating value, again, you would want to understand that what has been the past performance of the company as a going concern, and any trademarks that are registered with the trademark registry, any brands which belong to that company, and the past business and the availability of customer relationship, vendor relationship, and its importance or its relevance as on the CRP date and earlier, whether there's a revival that can happen with respect to those assets. So a lot, a lot more beyond what I said.
So I think, Ankit, this responsibilities has increased for the RP to provide it to the registered valuers, and the registered valuer finally to provide it to the committee of creditors as a valuation report, which actually would be compliant to all the regulations. So this is all for this episode on valuation. Whatever has actually been prepared in the last 6 months by the IBBI and the lawmaker, that has now been finalized and it is totally implemented. We are creating these kind of contents not for earning any amount from the YouTube. We have not even monetized it. We are good at doing RP job, liquidation job, providing consultancy, and also doing a lot of valuations. We are happy to do that rather than monetization of the YouTube channel. However, if you will subscribe us, you will get the alert in case you like these kind of contents. So please do subscribe, and if there is any need for any kind of valuation or any kind of business that we do, you can reach out to us. Thank you very much.
Thank you. Thank you so much.